Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MAANSHAN Iron and Steel Company Limited Annual Report. MAANSHAN Iron and Steel Company Limited offers a diverse range of businesses and services. The company manufactures and sells iron and steel products, including steel plates, section steel products, high-speed wire rod, and hot-rolled reinforcing steel products. These products cater to various industries such as construction, manufacturing, and transportation. In addition to its core business, the company also engages in the production and distribution of ferrous metallurgy, screw-threaded steels, round and section steels, angle and deformed steels, wires, and rods. It also sells iron ore fines, and scrap steel through import and export activities. Furthermore, MAANSHAN Iron and Steel Company Limited is involved in the production and sale of coke, ammonium sulfate, and coal coke chemical products. The company also designs, researches, develops, manufactures, maintains, and sells rail wheels, axles, wheel sets, bogies, and other rail equipment. The company's services extend to trading steel products and pig iron, as well as investment and trading businesses. With a history dating back to 1953, MAANSHAN Iron and Steel Company Limited has established itself as a prominent player in the global iron and steel industry. MAANSHAN Iron and Steel Company Limited market capitalization of $34 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that MAANSHAN Iron and Steel Company Limited holds a significant advantage in their industry. MAANSHAN Iron and Steel Company Limited trades at a higher price-to-book ratio of 0.77 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the key performance indicators presented in the summary. Revenue growth is primarily driven by several factors, including increased sales of automotive sheets and special steel products, record high section steel exports, and optimized product structure. Additionally, companies such as MAANSHAN Limited have exceeded 30% high value-added, high-tech content products, while Anhui Changjiang Steel Co., Limited achieved operating revenue of RMB 13.199 billion. On the other hand, revenue decline is primarily attributed to weak demand in downstream industries and a year-on-year decrease in average steel prices. Furthermore, regional breakdowns reveal that mainland China experienced a 3.6% decline, while overseas and Hong Kong saw a 6.4% decline. Product-wise, wheel and axles showed an increase of 2.59 percentage points, whereas steel plates and long products declined by 2.79 and 7.06 percentage points respectively. Overall, the performance of companies in terms of revenue growth or decline is influenced by various factors including market demand, product offerings, and regional presence. The net income of the company underwent significant fluctuations over the years. Initially, it increased by 1.4 times year-on-year, reaching RMB 3.954 billion. However, this trend was short-lived as it decreased to -2.72 billion RMB in subsequent periods. The decrease was attributed to a decline in revenue and sales across various product segments, including steel plates, long products, and wheel and axles. Despite the fluctuations, the company managed to turn its net loss into a net profit of RMB 1.08 billion. However, this improvement was short-lived as it decreased by 8.3% in subsequent periods. The decrease in net income can be attributed to a decline in revenue and cost of sales, which contributed to a decrease in net income. The company's profit margins also underwent significant changes over the years. Initially, they increased by 1.13 percentage points year-on-year. However, this trend was reversed as they decreased due to a decline in revenue and other factors. The gross margin in the iron and steel industry increased by 5.29 percentage points, but this improvement was not reflected across all product segments. The decrease in profit margins can be attributed to various factors, including a decline in traditional building materials, demand, and increased competition. This led to a decrease in profit margins from 2024 to 2025. Overall, the company's net income and profit margins underwent significant fluctuations over the years, with both increases and decreases observed across different periods. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, the net cash flows from operating activities for 2025 are substantial, amounting to 4,152 million RMB and 4,151,508,868 respectively. This indicates that the company is successfully converting its profits into cash, which is a crucial aspect of any business's financial health. Furthermore, the increase in cash and cash equivalents for 2025 is also noteworthy, standing at 5,527,051,517. This significant positive change suggests that the company is not only generating operating cash flow, but also accumulating it, providing a cushion against future uncertainties. Overall, these figures demonstrate the company's ability to manage its finances effectively and generate positive operating cash flow, which is a key indicator of its financial stability and growth potential. The company's debt level has undergone significant changes over the years. Initially, it decreased by RMB 6.1 billion on page 12, and then increased due to an acquisition, but was optimized through debt repayment on page 14. However, a more substantial decrease in long-term liabilities and borrowings was observed on pages 20 and 46, with a notable drop from RMB 150 million in 2024 to zero in 2025. Regarding interest expenses, the trend is mixed. On page 35, there was an increase of RMB 127 million, while on page 42, it decreased by RMB 87 million. Nevertheless, a more consistent decrease was observed on pages 46 and 50. With a drop from RMB 7.2 million in 2024 to RMB 12.1 million in 2025, representing a 21.6% reduction. The company's performance varied across different regions and segments. On the positive side, special steel, flat products, and specialty steel demonstrated strong performances. These segments showed significant growth and met or exceeded expectations. In contrast, the section steel business unit in Zone 1 struggled to meet its targets. This region underperformed compared to other areas, indicating potential issues that need to be addressed. Management is emphasizing the importance of cost reduction and efficiency improvement as a key strategy for the company's future growth. This involves implementing a new corporate development plan with 5 core strategies, focusing on core business, integration and synergy, market mechanisms, cost-effective operations, and risk prevention and control. The company is also undergoing a strategic transformation from a scale and efficiency-driven model to a variety and quality-driven one. This shift in focus will enable the company to adapt to changing market conditions and customer needs. Specifically, management plans to strengthen its special steel business, optimize flat products, refine long products, and expand its wheel and axle business. Overall, management's outlook is centered on driving growth through operational efficiency, strategic transformation, and a focus on core businesses that offer opportunities for expansion and improvement. The company has a history of paying out dividends to its shareholders. In fact, it is recorded that the company paid a significant amount of RMB 507,080,990 in dividends for the year 2025. This indicates a commitment to rewarding investors through cash distributions. On the other hand, the company does not appear to have engaged in share buybacks. Despite having the financial capacity to do so, it has chosen not to repurchase its own shares from the market. Concerns have been raised regarding the buildup of inventory and potential disruptions to supply chains. A notable example can be seen in the significant increase in long products inventory, which rose by a substantial 116.13% on a year-over-year basis. This surge in inventory levels may indicate underlying issues with demand or production that could potentially lead to supply chain disruptions if not addressed promptly. That concludes the financial summary for MAANSHAN Iron and Steel Company Limited. Feel free to comment below, and I will be happy to answer them when possible.